I almost clicked buy. Bitcoin was breaking structure on the 15-minute chart. Momentum building, volume expanding, clean setup, and this is exactly where I used to lose money. I'd hesitate and miss the move, or jump in early and get wicked out. That space between fear and FOMO is expensive. Now I do something different. Before I enter, I open the AI forecast page, not to predict the future, but to stack probabilities. Quick overview on what the forecast shows. You can choose a trading pair from this drop-down list. You can set your bucket time frame and the number of steps projected in the future. The chart gives the current price, going back 100 historic steps and forward predictions in the next 100 buckets. Trading isn't about certainty, it's about entering when conditions support your plan. These two models are very powerful models. Both models are loaded. Both models are bullish. Alignment like this doesn't guarantee anything. It just shifts probability in our favor. Key things I look at. Average projected move. Here it's about 0.7%. That's workable for an intraday scalp. Volatility is moderate, not chaotic. Projected max drawdown is smaller than projected gain, which means my stop is statistically acceptable. Concentration price is the price level at which the highest volume of trading activity occurred. It is sitting just below current levels, close to prior structure. Remember, the forecast UI only shows the last 100 steps backward from this current moment. That means for past trades, you can't retroactively pull the exact forecast unless you saved a snapshot or logged the numbers at the time. For this video, I'll use the live forecast to demonstrate how I read it, and for the historical examples, I'll show the saved snapshot or the journal entries I recorded at entry time. I'm not staring at numbers to feel smart. I'm asking one question. Does this environment support my setup? When structure and statistics agree, execution becomes easier. Let's see our first winning trade, Solana. The price was compressing under resistance, multiple rejections, tight range, volume dried up, classic pressure cooker, then expansion, a strong close above resistance, momentum confirmed. The plan was to wait for a retest and enter a bullish reaction. Stop loss would be below structure, target 3R, but before entering, I had to confirm with the AI forecast. In the note, I saved a forecast snapshot of the moment. Both models were bullish. Projected percentage change was healthy. Volatility was acceptable. The projected drawdown was smaller than the projected gain, which was an excellent sign. The confirmation was sufficient, so I entered the trade. After a few hours, the profit target activated with 3.1R, tagged it as a breakout, 1 hour time frame with perfect take profit and forecast confirmation applied. That's my habit, a great profitable protocol. Let's see another interesting trade I executed. A Bitcoin momentum trade. This one matters just as much as the winner. Bitcoin started ripping, big candles, volume spike, break of intraday highs. Old me, excited to open the position, would have chased, but I don't rely on my gut alone. I checked the AI forecast. The snapshot shows the first model is bearish and the second one confirms that trend. Volatility is high, forecasted to be around 6%. Projected drawdowns heavy relative to gain. Concentration price well below. This means it might run, but downside risk is elevated and late entries are dangerous. So I skipped the trade, not because of fear, not laziness, but probability-based discipline. I logged the decision. 30 minutes later, prediction came true, sharp pullback. The AI saved me a big loss, not totally relying on it, but it's a smart assistant. Not all lessons come from discipline. This losing trade. Ethereum gave a tempting scalp, small breakout, a little volume pickup, indicators are confirming. I glanced at the forecast snapshot I had saved earlier in the session. Trend is forecasted as bearish, projected move small, volatility messy. No clear edge. And for some reason, I ignored it, thinking it's not that reliable, and that I felt that my prediction is way more confident. It's just a quick scalp, I told myself. Rationalization in real time. Minutes later, I was stopped out at -1R. Small loss, but if I was careful enough, totally avoidable. I tag it, scalping, FOMO mistake, and forecast ignored. Tagged mistakes become patterns. Patterns become fixes. That's how journaling turns losses into actionable data. No drama, just structure. Trades sync automatically. Dashboard updates instantly. Profit factor healthy. Equity curve climbing without violent drawdowns. That tells me the process is working. Every trade I take or skip, I do one of two things. First thing, if I plan to show or review a trade, I save a forecast snapshot. Second thing, if I can't snapshot, I paste the key forecast numbers into the trade note average percentage, volatility, max drawdown, and forward steps used. Then I tag the trade with their appropriate tags: Breakout, Forecast Confirmed, Forecast Ignored, and others. That makes later reports clean and trustworthy. I occasionally run a simple test. Tag all trades where forecast was checked and both models aligned, forecast confirmed. When I isolate those trades in the forecast report, you can see the divide. Confirmed trades with forecast perform way better. Higher win rate, improved expectancy. Compare that to trades taken without forecast confirmation. The difference is clear and measurable. This isn't a hunch. It's an edge that shows up in the numbers when you consistently record the forecast state at trade time. AI forecasting won't make you profitable by itself. It won't fix revenge trading or over-leveraging. Discipline still matters, but it gives you a probabilistic filter. Instead of, I feel like this will pump, you'll get both models align, volatility acceptable, drawdown risk contained. The market will always be uncertain. Your process doesn't have to be. Forecast probabilities, execute with discipline, review with data. That's how randomness turns into edge. Thanks for watching. See you in the next one.